Everything rallied to end 2023. Is it too late to invest in this market? To find out, today we're talking with Elyse Ausenbaugh of JP Morgan Private Bank. Elyse, welcome.
Thank you.
So both you and the market at large seem to be thinking that we are going to beat back the idea of a recession. Why are you so confident in that?
The number one thing is looking at the preponderance of data that's suggesting that inflation is cooling in a convincing way. If you take a look at the Fed's preferred gauge of inflation, which is core PCE, and just take the data over the course of the past 6 months, right now that's running at a 1.9 annualized rate. So that's pretty much in line with the Fed's target, and we think that puts them in a position to start cutting interest rates while the economy, meanwhile, stays resilient.
Do you think that could be as soon as May, as the market's suggesting, or do you think it'll be maybe second half of the year for cuts?
We think the first cut comes by the midpoint of the year, but the possibility is that it does start to play out sooner. I think the next couple of months of data, both on the labor market side of the equation, but also the job market side of the equation, are going to be really important to watch.
Right, and the labor market, though, is the one area where maybe the Fed looks and says, well, if we cut too aggressively or too soon, this might be a problem. So does that temper your forecast on this?
Yeah, I think the ongoing labor market tightness, while you have seen some of that start to come out as more and more job vacancies have been filled, it does potentially pose this risk of putting upward pressure on wage inflation, which has been one of those really sticky sources that the Fed has been so concerned about. So I think you've got to pick apart the data, look underneath the surface, and really understand how the sum of the parts are working together to feel confident that inflation is not going to reaccelerate if the Fed does start easing even a little bit.
How does all of this translate into investment strategy? What is a portfolio manager to do with a forecast like this?
On the whole, we actually have a constructive outlook for both stocks and bonds, and we think right now really is the time to get out of excess cash and start putting that to work in the market. I think especially after a challenging past couple of years and in this environment where cash is generating a positive real yield, it is really tempting to stay complacent. But when we look at the different tailwinds that are emanating for the equity market, whether that's the return to earnings growth or the policy pivot itself, and this cool down in inflation, which we think can alleviate some of that pressure on margins, we see upside for the S&P 500. And within bonds, interest rates are still at elevated levels, some of the highest that we've seen over the course of the past decade. So we like this idea of locking in those yields where they are and also getting that embedded recession protection in the event that we are wrong.
What are you thinking about AI? Let's start there. That's the one on everybody's mind. Is there still room in the run-up for tech stocks after 2023?
So of course, artificial intelligence, the big hot trade of 2023. I think a lot of people right now are sitting here saying, can this really run further? They're staring at valuations that look elevated in absolute levels, but when we adjust those valuations for the expected earnings growth of these companies, they actually look a lot more reasonable. So we do think that AI and the broader tech complex will probably lead the way in this rally, but there are some more cyclical parts of the US equity market that we think haven't yet come around to the soft landing trade that could potentially participate in the upside as well.
So where do we look for that?
Well, industrials is a sector we've been really focused on, both in terms of the near-term opportunity, but also in some of these multi-year trends that are emanating from things like the industrial policy measures that were passed in the post-pandemic era. You've also got to consider some of the geopolitical events that have played out over the past few years and how that's forcing a lot of governments around the world to rethink things like energy security and supply or, energy infrastructure. That's going to take a lot of investment, and we think that those with the capital to deploy in those opportunities could potentially benefit.
The onshoring trend,
yes.
Essentially.
Yes.
Obesity drugs, huge area of growth and excitement for big pharma and for their investors in 2023. Are you still excited about that in 2024?
We are. So there's a lot of market opportunity when it comes to this diabesity theme. Obviously, some of that has been priced into the makers of the pharmaceuticals themselves. So we're also looking at different ways to play it through maybe some of those names that have been really beaten up because they think that they're going to be hurt by the diabesity trend. We see some opportunistic entry points amongst some of those names, and we're keen to step in here.
Diabesity, it's a great term. Is that a suggestion that this isn't just about medical usage, but maybe with more other reasons that people might be taking some of these drugs, that therefore it has a longer tail?
The headline purpose of these drugs is to help people with diabetes, but you've seen a lot of people come around and use them to kind of combat obesity. And that, of course, does have longer term health implications. And that's one of the reasons why we think that, this isn't just about vanity. This really could have bigger picture consequences for people's overall health pictures. And so we think it's something that's going to continue to gain traction.
Thank you very much, Elyse. We appreciate your perspective. We will have you back in a few months to check in on that forecast for interest rate cuts in 2024.
Great. Thank you.
Thanks for watching. For more, check out QZ.com.